Took a look at the stock futures, you saw that was all green. You're saying to yourself, hey, it's going to be maybe a pretty good day across the board. Then the PPI report comes out, hotter than expected. We saw the nosedive happen, sell-off happening going into the day, into the Fed decision. And we knew that pretty much a good chance, solid chance that the Fed would hold the rate, which they did. But maybe they weren't expecting some of the remarks that the Fed Chair Jerome Powell said in his Q&A today. We'll get into that and so much more. Let's bring in our next guest to help break it all down. Dan Varroney, economic strategist. Great to have you on, Dan. And, you know, it's never good for the market when the Fed Chair comes out and says the word uncertain and concerning. It seems like that never bodes well.
You're right. And Mike, the market ended down almost 800 points today, and the bond markets went nuts too. And when the bond markets go nuts, that's a good sign that there's uncertainty in the air. So the Fed Chair saying what he did really reflects the energy price shock that the U.S. economy is withstanding. And that's why today the Federal Reserve, keeping the energy price shock in mind, the Federal Reserve decided to stand pat. But what I want to share with you and with your viewers is the following, that coming into the Iran war situation, the economy was on a solid trajectory for growth in jobs, continued growth in wages, and disinflation, meaning lower inflation and the price of goods and services falling. But what we saw when we came into the war was uncertainty and volatility. And we started to see gasoline prices go up, and now we're starting to see other prices elevate. And that's why we saw the Fed stand pat today and saying we're not going to do anything with interest rates.
And Dan, going forward here, is the concern with the job market, labor market? We saw the numbers in February. March, given everything that we are seeing with the crisis in the Middle East, is that something that investors are worried about and maybe can drag on this next month as well?
So good question, Mike. So let's look at, the ADP numbers are showing private sector job growth. And I'm happy to report that the private sector job growth is coming from small businesses. And it's important that it come from small businesses because 2 or 3 new private sector jobs come from small business. So that's a very good sign for the U.S. economy. Today, the Fed Chair remarked that he thought the February jobs report was noise. I agree with him. I think we'll see stable to solid jobs growth in the March report when it comes out next month.
And what about, Dan, the possibility of next time not a rate cut, but a rate hike?
I think that's a fair question. But here's what I will tell you. Here's what we need to look at. We need to look at the duration of the war with Iran. As soon as the war with Iran goes away, my research tells me that historically, when there's a price shock and war goes away, then the price of oil falls precipitously. If that in fact happens, I think the Federal Reserve will not raise interest rates. But if we see an extended duration for the war and prices keep going up, that could be on the table. I'm not predicting that. But on the basis of everything that we're all seeing, that the U.S. is ahead of schedule in terms of things that it needed to achieve to address the serious situation in Iran.
You know, Dan, earlier this week, Monday and Tuesday, the market was upbeat. And given everything that's happening in the Middle East,
yes,
still no solution right now on the Strait of Hormuz. And we saw oil prices coming down. But today, everything changed with that PPI number coming in hot. And then we saw oil really spike up today.
Yeah, so in terms of the PPI number, what's interesting, it's services inflation that has to do with housing and insurance, and medical prices. So that was present going in to the Iran war. But what happened is that when you take that and you combine that with the energy price shock, then you have a different situation. So that's one part of the issue. The markets were doing well on Monday and Tuesday because they were reassured that the conflict in Iran was going well and that the end was in sight.
Yeah, so true. And now going forward for the rest of the week and beyond, historically, after a Fed chair speaks for the quarter there, how much reverberation the next couple of days do those remarks still have an impact, or is there just another reset, another cycle when the market reopens tomorrow?
Well, they had an impact today. They had an impact when we saw the bond market behave in the way it did. Short-term bonds jumped, and the stock market fell even further. We could see more of that tomorrow, but interestingly enough, we could see the bond levels and the stock market reverse themselves again either on Friday or early next week. But typically, it's usually a couple of days of reverberation, then things turn around.
Yeah, there we go. We'll be definitely taking a look at it all. Dan Varroney, great to have you on, as always, breaking down today's market news. We appreciate it.
A pleasure. Thank you.
Take care.